Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And a very good morning. Yang berhormat Datuk Seri Utama, Tengku Zafrul, Tengku Aziz. Thank you for gracing our Invest Malaysia Kuala Lumpur Series 2 with the theme Reviving Malaysia's Growth Engine. Now, obviously, our focus this morning will be on Budget 2022 that you tabled in Parliament on 29th October. Now, Wabi, this is the second time you tabled the budget. Before that, you issued the pre-budget statement, which was very useful, I must say. And there were numerous, very extensive engagement that you had with numerous stakeholders. Now, I must say, it is very much an expansionary budget at 332 billion ringgit and comprehensive for the people's well-being, business resilience, and prosperous and sustainable economy, very much in line with the objectives of the 12th Malaysia Plan for a prosperous, inclusive, and sustainable Malaysia. Now, Wabi, could you share with us your perspectives on the overall approach to this budget 2022, its main focus, and the key measures to support the near-term economic recovery and rebuild resilience for further growth? And are the measures enough to support the 2022 GDP growth target of between 5.5% to 6.5%? Thank you.
Thank you, Tan Sri Wahid, and Waalaikumsalam juga for the privilege of speaking this morning. The focus of our budget this year is rebuilding lives and businesses towards improved prosperity of the larger keluarga Malaysia. As you have pointed out just now, Budget 2022 remains an expansionary budget. This is to ensure that the recovery momentum is entrenched, economic scarring is minimized, and the economy returns to its medium-term growth trajectory. So concurrently, Budget 2022 speaks to the intent of ensuring Malaysia's medium-term growth prospects remain strong by building resilience and reforming the economy. As you know, some of the key measures include strengthening public healthcare facilities. This we have allocated 2 billion ringgit additional allocation specifically to continue the agenda on managing COVID-19. Jobs is important, 4.8 billion ringgit to generate 600,000 job opportunities. This is via Jamin Keluarga Malaysia or the Job Guarantee Scheme with the objective of bringing down the national unemployment rate to 4% by end of next year. And supporting businesses. Businesses are key as well, especially SME. So we announced a 40 billion ringgit under the program Semarak Niaga Keluarga Malaysia or Semarak Niaga. This spanning financing facilities, guarantees, and equity financing for every business segment, be it micro enterprises or public listed companies. So the driving of strategic investments include 2 billion ringgit in special strategic investment fund. This is to attract strategic foreign investments among multinational corporations. We will continue the high multiplier infra projects, Pan Borneo Highway, which was launched again recently by the Prime Minister, the Central Spine Road, and of course, not forgetting to continue to help vulnerable groups, including, for example, the 8.2 billion ringgit in direct aid via Bantuan Keluarga Malaysia. This is for 9.6 million Malaysians or recipients. So collectively, Tan Sri, we are confident that these measures will contribute to the GDP forecast of 5.5 to 6.5%, driven, inshallah, by the success of our vaccination program, the reopening of more economic and social sectors, as well as increased external demand from major trading partners. So I am also happy to note that the projection is actually very much in line with the latest projections by IMF and World Bank. IMF projection now at 6% and World Bank at 5.8%.
Well, indeed, thank you, Tengku. So many of us do believe that 6% is indeed achievable, given the expansionary nature of the budget that you table. Now, as I was watching you tabling the budget in Parliament on Friday, I couldn't help noticing that you were very confident in your delivery over that 2-hour period. And I'm just wondering whether, is it because this is the second time you're presenting, you've done it before, or is it because of the MOU signed with the opposition parties that gave you the confidence that this will be the budget that will be passed, with a lot of support from all MPs?
Yes, you're right. This is the second budget I have tabled. But if I may confess, Tan Sri, it does not get any easier. So given how the economy has been severely affected by the COVID-19 pandemic last year, really we at MOF and the government had work cut out for us. So I must admit that the challenges are bigger, and we are still trying our best to ensure a sustainable economic recovery. However, I believe what has helped is both the experience of the team and the government and the new approach as well, as you mentioned, via the MOU. On the one hand, the MOU has helped pave the way for growing bipartisan cooperation and involvement, including many levels of engagement that was done prior to the drafting of the budget. However, what has been crucial is the growing experience of the wider team that's involved in preparing the budget, which is, in fact, in the period between Budget 2021 and Budget 2022, we have announced 4 assistance packages this year. We had the Permai, Pemerkasa, Pemerkasa Tambahan, and Pemulih to continuously improve public healthcare capacity, preserve the welfare of the rakyat, and continuity of businesses. And Budget 2022 further complements the measures that we've announced in these 4 packages, and it brings it full circle. Of course, this further builds on our experience and learnings from Budget 2021. Last year also we had 4 assistance packages announced in 2020, from what assistance that is required to how to interact with each other, especially all the relevant agencies and counterparts, and of course the monitoring of the execution via our agency in MOF called Laksana.
Very encouraging indeed. So I think not many people perhaps realize the amount of work and resources that have been poured in, and we do appreciate that, Tengku. So Tengku, if I may zoom in into revenue. So in particular, the year-to-date 2021 revenue and fiscal position. So if you look at the total expenditure has reached 244 billion ringgit for the first 9 months of 2021, and that represents 76% of the total revised estimate of 320 billion ringgit. Now, typically, the government will only spend about 72% by this time, in line with the 71% year-to-date revenue achievement. Are we still on track for the 6.5% data for 2021?
Yes, Tan Sri, we are, but much will depend on our revenue performance, how far we can reprioritize spending, and of course the final GDP outcome. So in line with the opening of the economy and success of the vaccination rollout, we are expecting a stronger revenue collection in quarter 4, with the strong growth in quarter 4. For example, we're already seeing an uptick in sales tax and service tax collection. This is in line with the reopening of more economic sectors, particularly from the service sectors as well. Right. So on the expenditure front, we rationalized our expenditures in 2021 to accommodate the increase in the COVID-19 fund to 39 billion ringgit. This is to finance the additional assistance and stimulus packages. So in total, the overall deficit for this year is expected to be 98.8 billion ringgit, up from the original budgeted amount of 84.8 billion ringgit. So much will also depend, like I mentioned just now, on the final GDP outcome. First half growth, already announced, is a respectable 7.1% GDP growth, and all eyes actually will be on the second half of the year. We are announcing the third quarter GDP very soon, in fact next week, or later this week, in fact, where we will project a weaker than anticipated numbers in the third quarter. This is, as you know, Tan Sri, given the various containment measures in that period. However, we are confident that we will see a strong recovery in the fourth quarter following the reopening of the economy safely. So, in other words, we are confident that we are on track to achieve the 6.5% deficit as we had forecasted, as we announced recently for this year, for 2021.
Thank you, Tengku. Now, based on government estimates, revenue stabilization measures are expected to raise an additional 6.2 billion ringgit. Now, the current revenue projection of 234 billion, which is already conservative at only 14.3% of GDP, compared to the 5-year average of 16.5% has not factored the additional contribution. Now, what are your plans for this additional revenue? Is it to pay down debt, or you're going to increase spend?
Okay, you are right that the new revenue stabilization measures are not factored into the current revenue projection. The revenue projection is 234 billion ringgit. Ideally, the revenue uplift can be used to either improve deficit levels, as you mentioned, or be used in form of additional support measures. So we will see where and how the economy progresses next year. So it is not actually factored as you in the current revenue projection of 234 billion. Another area we have chosen, actually, Tan Sri, to be conservative is the oil price. We also have assumed that crude oil prices will average $66 per barrel in 2022. And in fact, for our longer term forecast, our medium term revenue strategy, we are forecasting $67 per barrel between 2022 and 2024. If oil prices today hold, which is around $83 per barrel, there is also potential for better than expected deficit numbers.
Well, thank you. So in the past, I think we're always talking about, is it 300 million ringgit additional revenue for every dollar increase in oil price. I'm not sure whether that number is still valid, but hopefully it'll be very significant. Now, speaking of revenue again, Tengku, if I may, we're all very grateful that there's been extensive engagement with the various stakeholders. Now, many people in the corporate sector were consulted on many things, so that's truly appreciated. But having said that, I must say that we could not help but be surprised by the one-off prosperity tax, the removal of the tax exemption for foreign source income, and the doubling of windfall profit levy for the oil palm plantation companies in Sabah and Sarawak from 1 to 3%. Now, how much additional revenue is the government expecting from these measures? So I understand that your Deputy Minister has mentioned in Parliament on 2nd of November that there'll be about 3 billion ringgit of additional revenue from the one-off prosperity tax. But could you perhaps provide more clarity on the numbers?
Yep. Yes. Well, before we go to the details, I wanted first to provide some context on the way the budget measures were structured to benefit the country, especially the rakyat. For the B40, for example, the government will be providing cash assistance, taking into account that the B40 individuals do not pay personal income tax. Whereas the M40, who are taxpayers, the assistance is provided through tax incentive and personal tax reliefs, which provide savings for M40. And at the same time, we hope that it will promote consumption. Ultimately, both approaches will achieve the same objective, which is really to improve the cash flow of the M40 and the B40, therefore easing the financial burden for this respective household. All right, so that's just to give you a context. So that's why B40 we have the Bantuan Keluarga Malaysia, and we have other support as well on the welfare front, we've increased, and M40 and also T20 we have done some tax measures. With one of the more popular one is the extension of the sales tax exemption on cars till mid next year, and also RPGT for individuals has been reduced from 5% to 0% on disposal of properties after more than 6 years of ownership. So now into the details, the new revenue measures also include measures like expanding the excise duties on sugar sweetened beverages, right? We're working together with the Ministry of Health on this, and imposing excise duties on vape and e-cigarettes, as well as other measures, direct and indirect tax measures. However, it is also worth noting that this budget also announced many tax incentives catered for businesses, where the main ones are the exemption period for refurbishment and renovation. We will extend this for the year assessment of 2022. The extension of the special reinvestment allowance also, I think that's another 2 years, so bringing it to total 5 years. And then we're also extending, this is a lot of requests for this, extending the period of carry forward losses from 7 to 10 years, and the deferment of income tax installment for all MSMEs for 6 months. That's another major request by the MSME. So based on the tax revenue measures and incentives and exemptions that I just mentioned just now, some examples of it, it's estimated that the government will have net revenue uplift of around 6.2 billion, which you mentioned just now. This therefore provide either an upside to revenue forecast or additional headroom to further support the economy. So I think there was also discussion on the removal of the foreign source income, right? Based on the Malaysian tax system, remittance actually has been taxed in Malaysia, but we had in the Income Tax Act 1967 was amended and exemption was given. Malaysian residents who remitted money to Malaysia have been enjoying this exemption for more than 2 decades. Therefore, we discussed and we feel that it is timely for the government to revisit such policies. So the removal of foreign source income exemption should not be taken as a negative move to discourage FDI. As an opening market economy, I think you know this quite well, Sir Tan Sri, the attractiveness of the investment ecosystem is not only determined by incentives. Significantly, the ecosystem also depends on the comprehensiveness of the country's tax system that is in accordance with the international tax standards, so which ensure that taxing right and fairly distributed to the jurisdictions. This to avoid any practices of tax evasion and tax avoidance. So I think this is important. It's signaling, so by reinstating Malaysia's right to tax, we are signaling the message that we do not condone to such practices. We've seen other countries, Hong Kong, Singapore, and others have either removed or amended their laws to ensure it meets the international standards. You mentioned just now on the palm oil levy, the windfall levy for palm oil, the government did not only increase the levy percentage, we also increased the threshold for Peninsular Malaysia and Sabah and Sarawak. So this will benefit the producers as well.
Well, thank you. So, Wabi, now you're talking about 6.2 billion again. Now, back to prosperity tax.
Yes, prosperity.
Yeah. So, obviously, for analysts, many of them they do appreciate that this is one-off. But the fear among many of the analysts that once you've done once, then it may be tempting to reintroduce it again whenever the fiscal constitution target is not being met. So how would you allay the fears of the analysts, Wabi?
Well, let me first assure you and everyone else that Cukai Makmur is one-off. These are extraordinary times, and the Cukai Makmur will be implemented in that spirit. So it will be utilized actually to ensure our public health system is more resilient in the face of any threats in the future. It's also important to note that not all companies will be impacted by the Cukai Makmur. It is estimated to impact not more than 250 companies actually, and those having more than 100 million in chargeable income, right? So in fact, we can see that different parts of the world, countries have decided, in fact, many of them permanently increase their taxes in the near future as they recover from COVID-19. But we're doing this one only for Cukai Makmur, and it's on top of the 100 million, and then the marginal increase in tax is 9%, right? So we've seen UK, for example, they have increased their corporation tax permanently, right? And then Saudi as well increased the VAT. Indonesia as well have increased the tax bracket for individual, especially the top earners, which gone up to even 35%. VAT also increased in Indonesia. So to put things into perspective, I mean, as the chairman of Bursa, among the 900 plus public listed firms on Bursa Malaysia, 145 made over 100 million in their financial year 2019. But in the financial year 2020, only 125 such companies as listed actually earn more than 100 million. And if you look at Bloomberg data, only 113 companies achieved the same pre-tax earnings level across the last 2 financial years. So it's a very small number of companies on the stock exchange as well. So of course, we have seen some knee-jerk reactions in the market following the announcement. However, after over a week, we have seen movements in the KLCI, the FBM KLCI, to normalize back to the range, which is about slight small 1 to 2% decline compared to the pre-budget 2022 levels. Yeah, but nevertheless, there could be a case whereby the impact of the higher tax rate to be partly outweighed in light of the broad-based economic recovery in 2022. So moreover, we have seen several large corporations who have said that one-off cukai makmur proposed in the budget will not affect their dividend payments. So I'm happy to hear that dividend payment to shareholders. TM also, for example, Telekom Malaysia, Tenaga Nasional Berhad. So they all have, even Axiata has stated their support to this effort. In fact, people ask me, why don't we do windfall tax, right? In fact, before this, where everyone will be affected. They were saying about the glove companies. One example is Top Glove. Top of Glove also have said that they are happy to contribute to the cukai makmur. So far, the company itself have paid approximately 2 billion ringgit in corporate income tax this year, and not expected to impact their dividend payments. So in the medium term, I've said it's one-off, but in the medium term, the view is to consider options to reduce the reliance of direct taxes and widen the revenue base. You will hear much more on this when the Fiscal Responsibility Act, which I mentioned in the budget speech as well, will be tabled next year, which will cover the medium-term revenue strategy that will outline the mobilization stages of revenue measures. We want to review our tax legislation and modernize our revenue administration. So cukai makmur certainly does not fall in that spirit.
Well, thank you, Tengku. Indeed, I do know that many corporate, they're happy to do their part to step up and contribute in times of need. Now, if I may move to capital markets. Now, I think I must thank you and the team at MOF for not imposing the capital gains tax on securities. So I think the challenge for that would be to us, if it's imposed, there'll be a dampener to trading volume, especially among the retail investors. Now, so therefore, I must say that the increase in the stamp duty is not unexpected, I would say. So from that 0.1% to 0.15%. But what many were hoping, though, would be for the 200 ringgit threshold to be retained and not to be removed altogether. Now, when we did the analysis, so very much depending on the volume, but if we base it on the 2020 volume, the total stamp duty collected would be about 500 million ringgit. Now, assuming the same volume and the same trading pattern, with the removal of the threshold, the amount could go up as much as 2 billion ringgit, so fourfold. So obviously, many brokers are requesting, could you perhaps consider not removing totally, but maybe increasing the threshold a little bit, as opposed to removing it altogether.
Yeah. Thank you, Tan Sri. We, MOF and the government, will continue to assess our revenue ecosystem. We need to do it holistically. We need to collaborate as well with the business community. We want to develop revenue policies that follow the international best practices. So on this matter, while the government imposed a higher stamp duty and removed the limit, it is important to note that the government also exempted the service tax on brokerage services related to trading of shares listed on the stock exchange. So this is to ensure that the stock market remains vibrant and the brokerage services remain competitive. So we are looking at it holistically, Tan Sri. We will continue to monitor this and engage the business. I understand that removing the limit may have challenges as well at this point in time. But through our assessments, this was seen as at the time during the discussion, as you correctly pointed out, when you talk about capital gains just now, this is like a middle ground as opposed to the imposition of capital gains tax, which was one of the major requests from various parties when we engage in the budget. This will have a much bigger impact to the stock market, Tan Sri, as you would have, as you know as well. Yeah.
Indeed, agreed, Tengku. Tengku, if I may move to the medium-term fiscal consolidation. So the 2022 fiscal deficit is expected to be lower at 6% compared to 6.5% for 2021. Now, this is very much in line with the commitment to lower the average fiscal deficit for the medium term 2022 to 2024 down to 5% average. and subsequently to between 3% and 3.5% of GDP by 2025. Now, this is more gradual reduction, so we do understand the need for an expansionary budget to stimulate economic growth. So I'm fully supportive of that. But can you share with us the views of the rating agencies that you've been engaging in recent days and week? Are they receptive to the gradual reduction? Because many of them were sharper reduction. And are there any threats of rating downgrade by any one of them?
Yes, we had a good session last week with all the rating agencies. It went very well. On growth in general, the view of the rating agencies is that the signs of an economic recovery are underway, for Malaysia. Some are projecting growth for 2022 that is more optimistic than our figures. One rating agency was saying, telling us they're expecting GDP growth to be around 6.9%. And on fiscal front, in general, of course, the view is that consolidation pathway is consistent with ours. They understand where we're heading on in terms of fiscal consolidation. The rating agencies expect Malaysia 2022 fiscal deficit to consolidate between 5.5 to 6% of GDP, which is what we have also forecasted, against a 6.5% this year. Right? This year we assume a 6.5 to 7% for 2021, but as I mentioned, it looks like we're heading to a 6.5% number. But the expectation of a gradual narrowing of our fiscal deficit takes into consideration our assumption that for further economic normalization, and we need also to look at increased petroleum-related revenue from higher oil prices. So they assume that as well. But when you look at our growth prospects, along with the new tax measures, this really has seen as the potential revenue increase beyond what the government's current expectation. They've highlighted also that our access, Malaysia's access to deep domestic investor base, where we have the ability to tap domestic financing without needing to access our reserves. This really underscores the country's highly rated government liquidity risks. So that is also something that they have factored in, given what we've done in the last 2 years, tapping into our highly liquid and diversified local domestic investor base.
Thank you, Tengku. On medium-term revenue strategy, what are the potential new tax measures that will be considered by the government moving forward? So naturally, the question keeps coming back about GST. Are you going to reintroduce that to broaden the revenue base of the government?
Yes, I mentioned briefly just now that some of the medium-term revenue measures that we are contemplating today include considering options to reduce the reliance on direct taxes. And we need to really widen the revenue base by shifting to consumption-based tax. We need to now look at reviewing the taxation and tax rate scope of the existing SST even for now. We need to opt for a more reliable consumption tax, which you mentioned just now, the GST, the value-added tax. And we need to also continue to explore new sources of tax revenue, such as taxation on the digital economy, for example. And in line with the government and the Prime Minister's commitment to make Malaysia a carbon-neutral country as early as 2050, this budget emphasized on measures towards making Malaysia a low-carbon nation. So as a start, we announced the voluntary carbon market, which is actually by Bursa Malaysia, that will be launched. And Bank Negara will provide financing for SMEs adopting low carbon practices. So as part of the 12 Malaysia plan, the government is now looking into imposing carbon tax. And the Ministry of Finance is currently working with the Ministry of Environment and Water on the imposition of carbon tax. So on GST in particular, back to that consumption tax issue, it is still ongoing. The current priority of the government is to sustain the recovery of the Malaysian economy. So concurrently, improvements are being done to the existing SST regime as announced in Budget 2022. I think the timing will be key when we can reintroduce or introduce new taxes as when the economy recovers and stabilizes.
You mentioned timing. So based on what's been stated before, government expects the government debt level to go below 60% of GDP only in 2024. That's been said before.
Yes.
So does this mean that any new revenue sources will only be rolled then and not earlier?
Yes. Well, the answer, I mean, really, notwithstanding the new measures proposed under Budget 2022, we have, we mentioned about duties on sugar, vape, and related products, taxing, even taxing on small value goods imported abroad. The current priority of the government is really to sustain the recovery of the Malaysian economy. Once this fully entrenched, either in 2024 or 2023, or even sooner, right? They will, then we will resume our fiscal consolidation path, including via the introduction of new measures. So we will definitely go down the path when you look at the deficit. We are expecting, in fact, in the 12 Malaysia plan, the target for deficit is around 3.5% by 2025. So that target still holds. But going there means that we will have to reduce debt to GDP by 2025 to around 60% as well.
Well, thank you, Tengku. Can I go deeper into expenditure? So when it comes to expenditure under the 12th Malaysia plan, some 400 billion ringgit have been allocated for development expenditure, and that would include the rehabilitation of government agencies such as Tabung Haji, Felda, and various private finance initiative projects. Now, does the 75.6 billion ringgit development expenditure cited for 2022 include the cost of rehabilitating these agencies?
Well, yes, the short answer is yes. The DE, the development expenditure allocation in budget 2022, the DE is around 75.6 billion ringgit. This will include rehabilitation costs of government agency. For example, 1.14 billion ringgit for the rehabilitation of Felda, and another 187 million ringgit for the rehabilitation of Felkra. You mentioned Tabung Haji just now. As you're aware, the rehabilitation program is done via the establishment of UJSB, this Urus Harta Jamaah Sdn Bhd. As at the end of this year, end of June this year, the total committed guarantees for UJSB stood at 21.1 billion ringgit. So yes, the answer is it does include those numbers, the rehabilitation costs of government agencies as well in our development and expenditure line.
Thank you for that clarification. On OE, operating expenditure, so we have your typical fixed costs, such as emoluments, pensions, and gratuities, as well as the debt service charges, have been on the rise. Now, more than 2/3 of revenue are currently used to fund this spending, compared to, say, 40% a decade ago. Now, that means that we'll have less money available for productive spending, if you like. Now, how do you view the trajectory for operating expenditure going forward?
So on the operating expenditure issue, this has always been a challenge over the years, right? For example, the budget for next year, budget 2022, the locked-in expenditure involving emoluments, debt service charges, retirement charges, and transfer that we have to do to the states actually is more than 70% of our OE. As such, going back to your question, Tan Sri, yes, the trajectory on OE will definitely increase because of annual increment in emolument, pension, and the higher debt servicing requirement as we, need to borrow more to fund some of the initiatives that we announced. But to address the increasing commitment, the government is proactive in ensuring sustainable revenue generation in the short and medium term. So in addition, the government needs to take prudent measures in rationalizing OE, as well as adopting a more targeted approach when it comes to subsidies and assistance. We've been discussing this in government as well, right? So we need to also, complement this with the exploration of more sustainable resources of revenue via the MTRS, by the medium-term revenue strategy, as opposed to, continue to rely on non-tax revenues. This will, as you know, entail widening and diversifying our tax revenues as soon as our economy is back to where it was before, right? Before COVID-19. And as I mentioned earlier, once the FRA, the Fiscal Responsibility Act, is stable, this will be done via the medium-term revenue strategy.
Thank you, thank you. Well, thank you. If I may move to the last part, which is about sustainability. Now, naturally, this conversation would not be complete if we
Yes.
don't talk about sustainability. Now, I must say that you have always been a great proponent of ESG, and this has been since your banking days. And now that you are in government, I'm glad that you're following through with even greater conviction. And it's great that the government has also committed to be a net zero greenhouse gas emission nation as early as 2050 and to stop the commissioning of new coal-fired power plants. Now, as we know, under the previous plan, there's supposed to be 3,500 megawatts of coal-fired power plants to be implemented in 2031, 34, and 37. And this is off the table. So Alhamdulillah, I think that's great. Now, as COP26 is progressing in Glasgow as we speak, now I must say that we're all heartened that Malaysia will be a signatory to the Glasgow Leaders Declaration on Forest and Land Use, as well as the Global Methane Pledge. Now, perhaps you may want to reiterate the alignment of Budget 2022 with the 17 UN Sustainable Development Goals.
Yes, Tan Sri. Following what was highlighted in the recent IPCC report and what has been at the center of discussion in COP26 recently, we've been following this closely here. We must make the necessary policy changes now, if we truly want to avoid the disastrous effects of climate change. Just like climate change, the COVID-19 pandemic has shown that most countries actually are still unprepared for multiple concurrent crises. We can see that the vulnerable groups are more affected by both events. So therefore, in our long-term sustainability efforts, it is crucial for the government to plan around the social issues as well as on the environment, which the pandemic has brought to the fore. In this context, the progress we have seen in the areas of innovation, development and commercialization of sustainable technologies during the pandemic can, and actually should be further encouraged and promoted. This is especially important as previous waves of rapid industrialization have shown numerous negative consequences. So we must not repeat this. Therefore, in Malaysia, beginning with the budget last year, we have mapped out budget initiatives to the SDGs, to the Sustainable Development Goals, allowing us to better match the national landscape of financing programs with SDG-related projects. As a result, we are actually amongst the 10 countries in the world which have fully aligned our national budget to the SDGs based on the United Nations assessment. So based on this progress, we have continued to do so in Budget 2022, which we recently tabled. This will anchor and drive several initiatives of our 12 Malaysia plan, which was tabled earlier, and the plan will build on what was achieved from the 11 Malaysia plan. So overall, among some of the Budget 2022 measures on sustainability include transition towards low carbon practice. This is some of the measures I mentioned just now, the VCM by Bursa, the Voluntary Carbon Market, matching grants also to encourage SMEs to use sustainable raw materials, renewable energy, etc. Environment and biodiversity, second one, we're given quite a big allocation here, total allocation of around 450 million ringgit. We want to focus on initiatives such as nature conservation, empowering local communities, as they can be the biodiversity guardians, ecological fiscal transfer, and NRW, and non-revenue water. Thirdly is a community empowerment. This is, what we announced, we match grants to NGOs, and that's worth 100 million ringgit. This includes tax incentive for social enterprises, government social and impact procurement program also is being looked at, and funds for UNDP on tourism, as you know, especially for startups, NGO, and local social enterprises. And we are hoping to also launch our first government ringgit-denominated sustainability sukuk, which is earmarked at 10 billion ringgit. So really, we are trying to make sure that we are more focused and want to skew more and more of our budget measures to the sustainability agenda.
Thank you. Very comprehensive indeed, I must say. Now, in order to achieve net zero, obviously there are numerous pathways that the government will have to actually look at. Now, if you look at the stock take of the emissions that we have, based on the 2016 data, the nationally determined contributions, so Malaysia as a country emits about 335 million metric tons of carbon dioxide equivalent for 2016. And 75% of that is very much contributed by the energy and transport sector. So naturally, if we're going to make a difference, we need to address these two sectors. And therefore, we fully understand the priority to deal with coal, to reduce that and eliminate that from our energy mix, and also to encourage more renewable energy. Now, in many of these, obviously, it will require investments in new technology and so on. Now, based on the recent study done by BCG and WWF Malaysia, which is going to be launched at COP26 on 12th of November, it's thought that Malaysia will probably require about 0.8% of GDP per annum in terms of investments in green energy and green projects and so on. Based on today's GDP prices of about 1.5 trillion ringgit, so that means about 12 to 15 billion ringgit of investments per annum. To your mind, is this doable from government's perspective?
I think it's doable. It has to be doable because if you look at the estimates, 0.8% GDP, what you mentioned is correct, but about 12 billion annually. But to put things into perspective, earlier in April this year, we actually got issued a sustainability sukuk that's around $800 million for eligible social and green projects aligned to the UN's SDG. This will enable Malaysia to not only meet its commitment as a responsible nation and signatory to the Paris Agreement, but also further its efforts to advance its people's socio-economic well-being. It's also a testament to our efforts in combating climate change, as well as accelerating the transition towards a more resilient and inclusive economy in line with 12 Malaysia Plan. Other notable sukuk issuance we had this in the social front is our first of its kind fully digital sukuk prihatin, which actually has a voluntary donation embedded in that sukuk. This was actually done in response to the public's request to participate and contribute to the rebuilding of the nation's post-COVID-19. So moving forward, as I mentioned earlier, the government plans to issue up to 10 billion ringgit of ringgit-denominated sustainable sukuk to finance eligible social or nature-friendly projects. And this will be complemented by our whole-of-nation approach on sustainability. So the government, financial regulators, and not forgetting the private sector will all play a pivotal role to furthering Malaysia's sustainability agenda. I'm proud to say that the financial sector has also played a key role in complementing the government's strong leadership in sustainability. Every stakeholder is now demonstrating a shift towards sustainable finance, which will be an impetus to the green economy transition. For the general public, education is key in changing Malaysians' attitude towards the environment. Towards this end, we have set up ALAM, which is the Environmental Education Fund. This will be done through long-term, intergenerational, and education-focused initiative. While at the same time, we need to forge partnership with the public and private sectors, especially civil societies, besides advocating policies among the regulators and ministries for better governance.
Thank you, Tengku. Tengku, back to the greenhouse gas emission, 21% of GHG emissions are actually contributed by the transport sector. So I must say that in your budget 2022, one of the biggest beneficiaries will be the EV industry. So I think the need to move to a CV actually is certainly necessary. And numerous incentives. So we're talking about exemptions of import duty, excise duty, sales tax, road tax, as well as in-road tax reliefs. Now, what else can we do to position Malaysia as an attractive investment destination for EV, as other countries in the region, such as Indonesia, they are also aiming to become a major EV player. So what can Malaysia do to be in this space?
Yeah. Well, from the government's perspective, and MOF especially, we are always committed in ensuring the offering of financial enablers and incentives that will further spur the local EV industry, as well as attracting more investments for this segment. And as you rightly pointed out, Tan Sri, we actually have begun with a focus on accessibility and inclusiveness towards the ownership of EVs via tax incentives. So this in turn will reduce the costs of owning an EV, making it more accessible to the general public. Moreover, we have complemented this with the income exemption for individuals of up to 2,500 ringgit on the cost of purchasing or installing the RAN, hire purchase, as well as the subscription fees for EV charging facilities. In terms of the overall policy on EV, the government via MITI will look into identifying new strategies to promote this industry, especially in attracting foreign investors. This will outline a number of specific initiatives, including those to strengthen the development of the EV ecosystem. This includes the standards. When you look at manufacturing of critical components, we also need to make sure we establish standards to support the EV ecosystem and encourage research and development to develop local technologies. These have actually been discussed, Tan Sri, with the MITI Minister during the Budget 2022 engagement. This move, which is in line with the government's goal to reduce carbon emissions by the transport sector, is expected to encourage investments in terms of EV production or its components. We develop infrastructure to support, like I mentioned just now, EV charging stations, as well as increase the consumer demand for EV vehicles. The EV-related incentives will also support the development of high-skilled green jobs in Malaysia. So overall, these incentives will be able to support the implementation of the low-carbon mobility blueprint, as well as help improve the country's air quality index.
Oh, thank you. Now, I must say this is very much indeed and supported. Now, having said that, I must say that the approach taken by industry has always been to move from the high end and towards the lower end. So my request to our players, whether it's Pro2 or Proton, would be to truly develop an affordable EV vehicles. Because I think there's a great demand for that, and I think that'll be bluish. So I do hope they actually work on that soon, if I may. So YB, time flies when you're having fun, as they say, and we are getting very close to the 50 minutes allocated to us. Before we conclude this session, may I invite you to convey a message you'd like to deliver to our fund managers and institutional investors, and indeed other investors to the capital market.
Yes. Again, Tan Sri, thank you for this opportunity. Allow me to reiterate again that Budget 2022 remains an expansionary budget to ensure that the recovery momentum is entrenched, economic scarring is minimized, and the economy returns to its medium-term growth trajectory. Concurrently, Budget 2022 speaks to the intent of ensuring Malaysia's medium-term growth prospects remain strong. We want to build resilience, and we want to continue to reform the economy. In the medium term, we will support the target to reduce our fiscal deficit to 3.5% to GDP by end of 2025. This is as stipulated in the 12 Malaysia Plan, and in achieving this, institutional reform will be pursued via the Fiscal Responsibility Act, which is set to be tabled in Parliament next year. The government will also continue to assess its revenue ecosystem holistically. We will collaborate with the business community. We want to develop revenue policies that adheres to international best practices. Ultimately, much will depend on the economy's recovery trajectory. Once this is fully entrenched, we will resume our fiscal consolidation path. On the topic of recovery in particular, we are encouraged by the findings of the World Economic Community, IMF report recently, the World Economic Outlook, that they are projecting growth to be second highest in terms of average real GDP growth in 2021 to 2026 for those in the A-rated category. Furthermore, we have seen promising signs, be it on the vaccination front, where over 75% of the population and nearly 96% of the adults are now fully vaccinated. On investment, we've seen improvement nearly 70% to 107.5 billion ringgit in the first half of this year, and the continuation of high-impact projects. On consumer sentiment, we're seeing improvement there in consumer sentiment, as we've seen in the improved index in the third quarter 2021, and also, of course, the pent-up demand for travel and leisure. And finally, on trade, which saw 24.7% year-on-year increase in exports to 110 billion ringgit for September of 2021.
Well, thank you, Yang Berhormat Tengku. Yang Berhormat Tengku, you've been so generous with your answers in your time. We truly appreciate those answers and your candidness, if I may. So if I may take this opportunity as well to express our sincere gratitude to you and team at MOF, at CASA, KETSA, and other government agencies for the trust given to Bursa Malaysia to work on developing the voluntary carbon markets leading up to the domestic emission trading scheme. Inshallah, on our part, we'll do our best to support government's and national agenda, if I may. So with that, ladies and gentlemen, thank you for joining us. Thank you, Yang Berhormat Senator Tengku, and wish you a very productive session ahead. Thank you.
Thank you, Tan Sri. Thank you for having me.